Now we move on to learning objective 3, understanding how costs flow through the accounting system. This is one of the most important process concepts in the chapter. In a manufacturing company, costs move through inventory accounts before they become expenses. Here is the flow of costs. Raw material starts in raw material inventory. When materials are used in production, they move into work in process inventory. As labor and overhead are incurred, those costs are added into work in process. Once production is complete, the costs move from work in process into finished goods inventory. Finally, when the finished goods are sold, the cost moves from finished goods into cost of goods sold, which is an expense on the income statement. This is the cost flow process for manufacturing. If you're working with a merchandiser, you would just have finished goods inventory, and that finished goods would flow to cost of goods sold when the items were sold. Now let's identify a key source document. This question asks, which source document is used to track the issuance of raw material into production? The correct answer is the materials requisition, sometimes called the material request form. This document tracks when raw materials are pulled from inventory and sent into production. Now we'll work through a full example. Blackhawk Custom Cycles builds 3 custom motorcycles. They have direct materials from inventory, purchased direct materials, and indirect materials. They also have labor costs and overhead applied using a rate per direct labor hour. This example shows how we compute total production costs and per unit cost. This slide breaks down labor costs. The shop manager worked 50 hours at $75 per hour for a total of $3,750. The fabricator worked 95 hours at $25 per hour for a total of $2,375. So, total direct labor cost is $3,750 plus $2,375, which equals $6,125. Now we calculate overhead. Overhead is applied on a direct labor basis. Direct labor hours on this job are 145 hours. The overhead rate is $30 per direct labor hour. So, overhead applied equals 145 hours times $30 per direct labor hour, the predetermined overhead rate. That equals $4,350 of overhead applied to production. Now we calculate total production cost. Direct materials includes $3,500 from inventory plus $2,200 purchased, totaling $5,700. Direct labor is $6,125, and overhead is $4,350, which we had just calculated on the previous slides. So total production cost equals $5,700 plus $6,125 plus $4,350 for a total of $16,175. You might write down the total production cost of $16,175. Now we calculate total cost per unit. Blackhawk produced 3 motorcycles at a total cost of $16,175 for the batch. So the per unit cost is $16,175 divided by 3, which equals $5,391.67 per motorcycle. To conclude this section, remember the overall cost flow process. Raw material moves into work in process. Labor and overhead are added into work in process. Completed products move into finished goods. When sold, finished goods costs become cost of goods sold. This tracking is essential because it helps companies determine per unit costs for pricing and profitability decisions. Now you'll work through another cost flow example. Martin & Sons Custom Contract Manufacturing provides cost information such as direct labor hours, direct materials requested, indirect materials requested, labor rate, and overhead rates. You have two questions. What dollar amount is moved to finished goods? And number two, what is the cost per unit for 1,200 trailer hitches? Take a few minutes to work through this carefully. Pause here and work through the activity, and once you've finished, check your answers with the solutions provided in the back of Chapter 2.